Hi, welcome to the Market Alert for Wednesday, the 16th of March 2016. So today is the day. Yellen speaks later on this evening, 6 p.m. Normally 7, but obviously with the US going forward to daylight savings, we will see this news item released at 6 p.m. So just make a note of that. Yesterday I sent a note out saying that I wasn't going to bother because the market in the pre-market session, you can see there, was so sideways, and then we had the same pattern that we had on Monday, a quick winning trade of 20 points followed by 2-3 losers. The orange circles here, when you reload the chart, show indecision on whether the order was filled first or the stop was hit. It's hard to actually say when you actually pull the historic ticks back in. That's why you see these orange ones, but there were 2 black ones during the trading session and a third, so it just goes to show how quiet it really was. The market then pulled up to drive through the 17,200 level, and then again you can see in the evening session just stuck in that sideways range, and that's what we've seen now for the last few days. And that's because, as I've barked on about, is the market waiting for Yellen. Next week things will be completely different when she loses all sorts of credibility, because she's not going to make a decision one way or the other, and she may even become bearish on the market as well, but only time will tell. We'll find out sooner or later at 6 p.m. GMT. In the daily chart, you can see the market's broken through the 76%. It's actually holding there, and if we just put on an extension here of 0 and just move a bit higher, we can see that the next upside target is here, but also we've got Monday's high to take out as well. So it will be interesting to see how the market copes with this. We could also roll the fib up as well, just to show you where it is. It worked really well in this area here until the market broke through. We've drawn from here down to here to get this fib in place, so we can actually move back to the next high, which is probably going to be this one over here. If we can just there and there, and you can see the market now is in the area where the next resistance will be. So let's see how the market gets on with that one in the pre-market session there. So there's a bit of movement to the upside there, 17,323. I have no doubts that the market's likely to go up, and news wise we have a whole stack of news today. From 12:30 we've got let's see where we are at 12:30. We've got the annual budget release, CPI core, building permits. Again, notice how negative these other ones are. If not, they're actually forecast lower, apart from housing starts there. Capacity utilization is also being released. That's forecast lower. Industrial production lower. So you can see there's a pattern here. There is a global slowdown, and yet Yellen increased rates in December, so you can only assume she was forced into doing it. It wasn't off any real data, but a credibility issue. Also, crude oil inventory is big one at 2:30 p.m. as well, 2.9 million barrels. Surplus forecast, previous 3.9. If this comes out higher, then it's going to put more pressure on crude oil, which I think is going to move also lower from next week as well. This has been ramped to try and save those that have loans with the big banks like JP Morgan, Deutsche Bank, etc. for fracking, to ease the pain a bit, to lift the price a bit so they can make a few more profits to service these loans. And then the big one, FOMC economic projections, federal funds rate will be released. Also it shows 0.5% there, will remain unchanged. I can't see that being increased or decreased. FOMC statement, and then the press conference as well, all out at 6 and then 6:30 p.m. So stand aside when this lot hits the market. Again, probably might not be any reaction because the market's expecting nothing, but the thing is, going forward, the market's got nothing to look forward to. Over the last month, the market's been able to go back up by 1,500 points because the market's had something to look forward to. They've had Draghi and now Yellen speaking, and if she doesn't do anything, well, how can the market stay on the highs? That's the question. So I expect the market to start moving lower from the end of this week or next week. Right, implied volatility stayed unchanged at 14, which is very, very unusual, I have to say. It wasn't as if the market was really wild to the downside or anything, so that's a very interesting one. I've not seen that before ever in 20 odd years. 14% remains unchanged, and again in the chart you can see we've got a lovely pullback here. We could just do with it coming back a bit more if possible. Down to the 12% level would have been ideal, but at the moment the market isn't doing that, and I don't know why, unless they're keeping the value of these options slightly higher, which would be odd, because generally they want cheaper options to then move the market, the underlying market lower. That's the Dow, and then these increase in value very, very quickly. Right, that's it for today. See you in tomorrow. Fingers crossed, and Yellen does something. I suspect she doesn't, but let's wait and see. Either way, she's doomed anyway, because the credibility is the problem now with all central bankers, including Carney, Super Mario, and Yellen. They look like they are headless chickens and just basically rearranging the deck chairs on the Titanic, because that's precisely what it is. The water's coming on board, and there's not a lot they can do about it. Right, see you tomorrow. Have a good one. See you in the next one.